Hello and welcome to this session. This is Farhat, in which we would look at compilation of financial statement. So what is this term, compilation of financial statement? A compilation of a financial statement is a service that a CPA firm usually provide that assists management in presenting financial information in a form of financial statements. And let me tell you from a personal experience. When I was practicing at my CPA firm, it was a medium-sized CPA firm. We had a lot of mom and pop stores, businesses, as well as medical doctors, MDs. Those businesses, they don't have a dedicated accountant, or they don't have an accounting department. They might have a bookkeeper, secretary, someone that just, collect their information, their financial information. Then at some point, they might need a loan from the bank. So once they need that loan from the bank might ask them for financial statements. Remember, those are small, medium-sized businesses. So that's the need for that. So why would somebody want their financial statements to be compiled, to be prepared? Because they lack the staff, they lack the expertise on their end, and they need to get a loan from the bank. That's not the only reason. They could be getting a financial statement to present their information to a potential investor. Maybe they just want a financial statement. They're comfortable looking at their business, but they don't have the expertise to prepare it. But most of the time you do it because you have to. Because to compile the financial statement, you have to pay money to the auditor, to the CPA firm. Well, auditor, it does not matter. You have to pay money to the expert, to us, to compile your financial statements. So it's not like everybody wants to do it. Unless you have to, you don't have to do it. Private companies obviously only need compilation of financial statements, because remember, publicly traded companies, they do have to have an audit. And once you have an audit is a way higher in form of assurance. We'll see that than a compilation. So if you're a publicly traded company, you will never need a compilation because you get your financial statement audited, which is a higher level of service. And there's no need to be independent from that company if you are preparing their financial statement. But if you are, you just need to disclose it, that you are not independent. But you could still compile the financial statements without being independent. So you could have a financial interest, direct material financial interest, and you could still prepare the compilation. Now, as I mentioned, unlike audit or reviews, a compilation does not provide any assurance. So when you prepare a compilation, all what you are doing is you're putting the numbers together. You are not giving any assurance about the accuracy or completeness of the financial statements. No assurance. This means what? This means you don't verify the financial information. You don't go out there and check whether this number is correct or not. The accountant don't provide an opinion whether the financial statements are free of material misstatement. We don't provide an opinion. The accountant relies on management provided information without testing or evaluating this information. So this is what we do as CPA firm. All what we do is we take their information, put it together in the form of a compilation. Now, just to kind of give you the big picture, this is what the big picture looks like. So compilation is you give no opinion and no assurance, no testing. You don't test anything, you don't verify. This is compilation. Then the next higher level is review. We'll talk about reviews later on. In reviews, you might conduct analytical procedures, you might ask questions, you might conduct inquiries. Then obviously audit is the highest level of assurance. So here there is no assurance. Review, you're going to see later, we're going to give limited assurance. In an audit, we're going to give reasonable assurance, which is the highest level of assurance. Now, if you want to give a high level of assurance, you have to give more evidence. So the less assurance you have to give, or when you give no assurance, you don't have to collect evidence. So the first thing we are going to do is look at a compilation report and explain it in general. How do you start this compilation engagement? That's the first thing. Then we would look at the actual field work. What do you need to do to complete the work? Then we would look at the report. Starting with why a compilation is not an assurance engagement. So it's not any type of assurance. That's the first thing. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
Well, as I mentioned, it's different from audit, different from review. No verification of transaction as in an audit, no analytical procedures or inquiries as in a review, and you express no opinion. For example, let's assume the financial record shows $500,000 in revenues. Well, in an audit, you would check support and documentation, invoices, bank deposit to verify the accuracy of the sales number. When in a compilation, you just simply report what management provided without any verification. This is going to give you compare and contrast what we are doing here. But when you start a compilation, when you want to conduct a compilation, the first thing you do is you establish an understanding with the client. And believe it or not, this is in a sense mandatory. Now, why? Why? There is a case. I don't want to go off tangent, but there was a case where an accountant, a CPA, used to live in a condominium in a building. There's like different apartments, condos. And what the CPA did, he was on the board of director of that condominium. And what he would do on a regular basis, like on a quarterly basis, he would just put the financial statement together. Then the condo association will pay him like, I don't know, $500 or whatever amount happens to be. What happens, there was some fraud that was taking place in that condominium association. And guess who they sued? They sued the auditor, who was a resident of that building, a resident of that condo association, and he was just doing them a favor. But when they wrote the check, on the check and the memo, they wrote an audit. And that CPA did not pay attention, like, oh, it's an audit, it's not a big deal, I'm just putting the financial statement together. What he was really doing is he was doing a compilation, just putting the financial statement together for the condo association. What they wrote on the check, an audit. So when the CPA was sued, he was held to the standard of an auditor because there was no engagement letter. So the first thing you want to do, once you engage with someone, you want to have a clear understanding what services you are providing. Because if something happens down the road, this is not an audit, this is a compilation. I just took your information, put it together, I did not check it, I did not verify it, I didn't do anything. That's what I needed, that's all what I did. Well, if that's what you did, if that's what you want to do, establish an understanding. So before you start the compilation engagement, the accountant and the client must establish a clear understanding, and this understanding should be documented by an engagement letter and should cover few key elements of the understanding, which we'll cover. And I remember when I was leaving practice, this engagement letter was more and more required, was starting to be really mandatory. And I still remember many clients, they used to call us as why do we need to sign this letter? We don't like to sign letters. Well, you have to. It's accounting standard. We have to have this letter on file. And they did not really like it because some people just don't like to sign, in quote, a contract. But that's beside the point. So you have to have so we have to explain to them this is a standard, just to establish formally put the relationship on a piece of paper. So key objective are the objective of the engagement. Exactly what am I providing to you? Well, clearly define what the accountant will do. Prepare the financial statement without assurance. Now, if this CPA at this condo had this understanding, if he was sued, he would say, I had no responsibility of checking anything. Well, ensure management understand that the accounting is not verifying accuracy. The accounting is not checking the transaction to determine whether they are fairly presented or correct or anything like that. So for example, you will spell out exactly the purpose of this engagement is to compile the financial statement for your corporation for the year X7. Also in that letter, you have to put down management responsibility. What is management responsible for? Management must provide accurate and complete data. You're giving me all the data that's accurate and complete. So ensuring compliance with regulation. I'm not checking it, just you have to give it to me. That's part of your good faith. Management is responsible for preventing fraud. I'm not looking for fraud. I'm not looking for errors. That's not my job. That's your job, the management. For example, management agreed to provide all necessary financial document and certify the information is accurate to the best of their knowledge. And this will basically relieve the person preparing the compilation from their responsibilities. Now, do they have, what if there's a fraud outright or something is, clearly wrong? Then we have to do something about it. We'll check in the next recording. But here we are establishing the relationship. So management is responsible for these financial statements. What is our responsibility as accountant? Well, our responsibility is to put the financial statement together based on the information given. The accountant does not express any opinion or provide any assurance. I'm not giving you any assurance. Not a limited one, not a reasonable one, none. So the accountant will prepare the financial statements, balance sheet, income statement, and cash flow based on the data supplied by management. This is our responsibility. Also, you have to let them know about the limitation of the engagement, what you are and not responsible for. We are not responsible as accountant of detecting fraud, errors, or non-compliance with laws. We're not doing that. We're not responsible for identifying material misstatement. We're not doing that. That's not what a compilation does. If you want us to do that, then it's a totally different engagement. This compilation engagement does not include any audit or reviews procedures that cannot be relied upon to detect fraud or misrepresentation. You want to spell it out that it's not a review, not an audit. We're not checking for anything. Now let's take a look at a multiple choice question from farhatlectures.com. In a compilation engagement, which of the following is required by an accountant? So which one is required? We have 1, 2, and 3. 3 options. Do you need to establish an understanding with the client in a written agreement? Do you need to understand it? Definitely you need to understand it. So if 1 is true, this cannot be right. 2 and 3 cannot be right because if 1 is true. So it's either 1 or 1 and 2. Obtaining an understanding of internal control. Do you have to do that for an engagement? And the answer is absolutely not. Obtaining an understanding of internal control, that's a lot of work. You do that in an audit. We don't have to do it in a compilation. So 2 is out. If 2 is out, 2 is out, 2 is out, the answer is 1. But let's make sure 3 is not included. Perform substantive and analytical test. We don't perform any analytical procedures. This could be a review or an audit. So indeed, for this question, you have to establish an understanding. And this whole recording was to show you how to establish this understanding through something we called, you guessed it, the engagement letter. So be familiar with the engagement letter, what's included, why do we have to establish an understanding, and everything is spelled out. In the next couple sessions, we'll keep working with compilations. We'll look at when we hit the field work, basically when we prepare it, what do we have to do? Can we prepare it? Yes or no? Do we need any expertise? Then we would look at actual reports. What should you do? Go to farhatlectures.com, whether you are an accounting student or a CPA candidate. The best thing you can do is invest in your education, invest in yourself, study hard, good luck, and stay safe.